So what is so revolutionary about it outside of Bitcoin? So Bitcoin is the store of value. What is all of the excitement about Ethereum, the whole blockchain, digital assets? What world do you see looking forwards now that this has kind of given birth and has become unproven?
Yeah, my framework is going to be based on things that I saw happen before. So to me, it's a little bit like I would look at Bitcoin as sort of kind of like DOS or BASIC, meaning an older programming language that is, or actually not even that. There's something called assembly language, which is when you have like a microprocessor in your computer, it's not looking at a bunch of words. You're programming that in a series of ones and zeros. And so it's very granular and very precise, and you can see everything that's going wrong if it goes wrong. And if it glitches, it's going to glitch and just stop. So Bitcoin is kind of at that layer where the programming of Bitcoin is so granular that you can see everything. And there's not a lot of people that like to do it because it's tedious. And so there was a need after Bitcoin got started to make the concept of blockchain more applicable to broader sets of things. You needed to make it easier to use. And so rather than programming this laptop that I'm using Zoom on in a bunch of ones and zeros, a lot of applications on a Mac or an iPhone are built with higher level languages. In the case of applications on iPhone, there's something called Xcode. You basically download it and you can drag and drop modules and user interfaces and bump. And software development to some degree today is no longer development. It's permission plagiarism. So you basically go out to GitHub and you go to, GitLab and you find different blocks and you paste them together and you hit run and then you change the variables and you just tweak it. But that level of programming, it's faster, it's easier, you get to results sooner, but it's not as secure. So what you see in the development of, Bitcoin's never been hacked because it's this very granular, clunky, low-level thing, and you can see everything going on. Ethereum's this abstracted language that took, or it's built on an abstracted language, solidified. It was designed in a way that attracted every kid that could design an iPhone app. And so there was this flood of developers because it was easy to use. But it had these little things underneath because it was based on other things where if you put these two little gears together, maybe they don't quite mesh. The early days of Ethereum were filled with all kinds of, the wallet hung, it was hackable. This was hackable, that was hackable. There were like all these like gaps because people would attack it at kind of lower layers. And so I think Bitcoin in that context to me is such a rock solid thing. It's like the gold standard. And I think Ethereum and some of the other languages and tokens around different blockchains may be simpler to use and therefore draw developers that want to apply blockchain principles to managing things, whether it's like, fleet of cars or tracking assets of different kinds of things, tracking transactions. And I did fund some things in that space too. I'm one of the early backers of CryptoKitties, for example, which
what did you see in that? Was that just you seeing Second Life all over again, basically?
It was one of the very, very first. So first of all, the team. I always back people and teams first, and then a space. They have to be in a space that I think is at. It's a big. So philosophy for venture capital 101. You're not going to make money if you're in a dead market. So you want to be in a big market going through transition that's starting to accelerate or leading up to that. You're not going to make money if you have a shitty team. So you want A players. And then you're not going to make money if you overpay or you get the capital structure wrong. So it's very simple. I had a conversation with Don Valentine. Don Valentine, the founder of Sequoia Capital, was a backer of that first startup that I had joined. And when I went into venture capital in the early 90s, I used to follow him around. And we got stuck in an airport one day after a board meeting at Microchip because there was a flight delay or something. I had dinner with him, and I was like, Don, you're so good at this. And by the way, if you want to see a venture capitalist that is just amazing, think about only 10 investments he ever made or a subset. Oracle, Apple, Cisco, Electronic Arts, LSI Logic, Network Appliance. Just in that, there's like 1,000 billion, right? And then his firm went on to fund Google and, really everything else. Zoom, they came in late to Zoom. So Sequoia Capital, they just have that DNA of a great thinker that understood markets, understood issues, and he was kind of, one of my early mentors that I followed around. And so I said, Don, what do I do to be good at this business? And he said, it's very simple. You only have to get 3 things right: markets, management, capital. And he said, if you think about those 3 things, if you have a great team and infinite capital and you're in a shitty market, you'll lose money every time. So just make sure you're in a good market and then get the right people. And if they're not working, change them out till it works. And that was the early Sequoia culture. They're not so much like that now, but they were very kind of, hard on management at the time because they saw the management as a bit of a commodity. But anyway, so I think we're in this world now where I think Bitcoin is this reference standard. Ethereum and CryptoKitties ran on Ethereum, and they broke out as the highest volume application.
But anybody else would have looked at this and said, what the hell do we care about, digital kitties on a blockchain, right? That's what the world's narrative was, but you saw something entirely different.
Well, it was, yeah. So I tend to be drawn like I was to the peer-to-peer thing. When I feel like there's a new and useful technology that gets a foothold around a use case, I'm just generally interested. And then whether or not I fund it's a different case. But in this particular case, it represented to me the first high volume transaction machine. Because to me, I didn't care if it was a cat. It was interesting that it was a cat or a set of cats, but you could put anything in there. So it was representative to me of what am I going to learn about driving super high volume transactions on a blockchain here.
Is this tokenization essentially that you're seeing within this?
That is, yes. That's
so
it.
You're seeing, okay, they tokenize these kittens, but therefore I could tokenize anything.
That's right.
And therefore tokens become securities have value, and now we've got this whole digital platform to exchange all of these things anyway.
That's it. Basically it's this, to me, it represented one of the first steps towards digital value exchange in a universal way of anything. And it's, and like Second Life, it was its own economy, right? It was its own little closed world with its own kind of currency. And, back to your question about where does Bitcoin fit in the world's currency system and other value exchange? So I have another kind of weird ethereal thought on this whole, and ethereal doesn't mean Ethereum, but, I think if you think about the history of currencies, generally speaking, and let's take just recent history, then we're going to expand. The US dollar as we know it has not been around that long, right? So if you think about, so 1944, Bretton Woods, reference to a piece of gold to give it trust. So how do you impute trust? In that time, it was like there's physical gold. Now it's blockchain, if you understand blockchain. And then it kind of ran out of gas in 1971 or 2. And then they had to abstract it from the dollar, and it became this floating thing, a reserve currency with its special advantages. But that's only been in place for 28, 29 years. And is it breaking now? Don't know. It might be, right? So 44 to 72, I don't know how, it wasn't that long. It's like kind of 20 or 30 year periods. And we're having these hit the wall moments within a few decades at a time, right? So that doesn't give me a lot of confidence that this currency is going to be around 100 years from now. I don't know when it totally breaks, but it's going to break at some point. And now let's go back beyond this couple of generation period to societal structure and how people exchanged money. So let's go back to like revolutionary period, when a bunch of people got off boats from continental Europe and stepped on, sandy beaches or wooded beaches in America. They set up colonies. So let's draw a line here. This is Connecticut. This is New York. This is Virginia. Every single one of them created their own currency. Every single one of them, right? So if you think about currencies and value exchange, anytime you have a societal group, whatever that grouping is, religious, political, cultish, you're going to have little exchanges of things, right? So we're in a world that increasingly is able to have a gajillion micro communities exchanging value however they want, right? And so the world that we knew after World War II was temporary, because you go back before, let's say, humans have been around for 400,000 or 500,000 years in kind of the form we are now, longer than that if we were monkeys. And if you think about what was society like when you were a caveman, and how did you do value exchange? In the morning, you might wake up and say, hey, I'm going to go fish with Raoul and 3 friends. And in the afternoon, I might pick 5 other people. And, in the middle of the day or later in the evening, I might do something else with another set. I didn't work for a company. You had a flexible fabric of need that you serviced with free molecules that could disperse, reform, apply themselves whenever you needed productivity of a certain kind and a certain thing. So work was fluid, right? It wasn't until the physical industrial revolution, just like we talked about music, that societal structure and work changed. So it's only like 1% of human history. We've been locked in these big companies. So after industrialization and capital intensity, we had this notion of giant companies that promised their employees that they would have pensions forever. And I know you're big on this pension thing. That's all fake, right? Like it was like, come work for me, I'll take care of you for the rest of your life. That's not true.
Bullshit. Yeah, it was a lie.
Yeah. So it was never sustainable, right? So we know a certain limited history of our parents and grandparents that worked for these big companies in the aftermath of World War II. But before that, they never existed for hundreds of thousands of years. Why should this structure be what it will be in the future? I think we're going back to, or the future is going back to what we were for all of human history. Think about every young person you know. They work on 5 jobs. None of them works for a big company. Think about every big company you know. They're mostly in trouble, the industrial ones. The ones that move bits around freeform, they're not in trouble, but the General Electrics, the old industrial things, no young kid's going to go work there, or hardly any. So we had this like societal line of this is continuum of society. Oh, capital intensive big companies and nation state. Oh, nope, that didn't really work. So what will that do? That's going to dissolve national borders in a way. And if national borders go away,
the internet's doing that already.
It is. So this premise of what is currency in a world that looks like caveman days with computers? It's a totally different thing, right? You're going to have microeconomies and all kinds of assets, and I think humans like to have a reference standard. So I think back to your original question, I think Bitcoin is one of those things that's very secure. And if you think about the human behavioral economics around gold and the need to hold gold, and you may know the answer to this better than me, but I think all the gold in the world's worth 8 trillion?
10 trillion, let's say whatever.
Okay. So if Bitcoin becomes worth, a tenth of that over a decade or less or more or whatever it is, or even 20 or 30% of it in 2 or 3 decades or 50 years, whenever this dollar regime sort of starts to have big stress, what's it worth then? Is that 100,000 or is it 200 or 500 a coin? But it's somewhere in that neighborhood, right? So I think it's one of those things that you buy a little, you hang on.
Yeah, see, I'm really interested in this because I've been looking at the fragmentation of society and the change of the tribalism brought by the internet, because we exist in 2 societies now. We live in a sovereign state. You live in the United States, I live in the Cayman Islands. We have our citizenships. You were originally Taiwanese by heritage. I was originally British, parents from different countries. But now I live online. I'm now part of the macro community. Right? This is a false community of people, of which most of the people I've never met before, but I talk all day on Twitter to, or via video, or whatever, right? And we can have mediums of exchange. We have our own terminologies. We have our own in-jokes. We're a society as it is. But I may be part of another society as well. Maybe I'm part of kind of whatever my other interest may be, music and different societies, different groups. And as you say, what becomes really interesting is once you start thinking of this new tokenization, CryptoKitties being, I thought was really fascinating. Once you understand that everything can be tokenized that has value, and particularly digital assets as well, and we have this multi-tribal world, we've now just built a brand new securities market with millions of new instruments we can trade. So I'm looking at the pretty shitty fucking world that we've got now with rigged central bank buying and a narrowing base of ownership of equities and all of this mess that we're all finding ourselves in. Well, we're about to be given an entirely new playing field.
Yes.
And everyone still thinks of tokens from the first wave of tokens 2017. That was just the start of where this is all going.
I agree. Well, hey, the first set of web pages sucked too. A lot of porno and a lot of, scammy sites, but they evolved into something cool.
Yeah. And so I very much think that if we were to go forward 20 years, if you're in the financial industry, you're actually trading value between tokens and different.
Already.
So, I've always said the point being, let's say you take a firm like Exxon, huge, big, monolithic entity. Right now, I can buy their bonds or their equity.
Right.
But they employ, 500,000 people or something crazy. And maybe you want the upstream and I want the green energy component and that person wants the buildings and that. We can do all of that. We don't have to have corporate entities any longer, which is your point about corporate entities, is they don't need to exist. They became a legal thing to turn a company into a human, a corporation. So for legal entities, that all goes.
Very similar to the media business, right? So if you think about production and distribution, if you could control the production and distribution, you could control the media, the content, the currency. And I think digitization eroded all of that and put it in the hands of everyone else. Because, you literally could get on a computer and create your own token right now.
Yes.
You could easily do that. You could have a real vision currency if you wanted. And it's a question, do you or do you not have a little nation, a little cult, a little following? And you could have people trading it just like Second Life. So it's in every asset, whether it's a community or, as you described, buildings or what have you. I also funded something called Fluidity that just merged into Consensus, which had released the peer-to-peer exchange AirSwap for air swaps, like instant exchange of tokens. They did an experiment with the securitization or the tokenization of a Goldman Sachs-led real estate project financing. So instead of getting a stack of papers around a sort of a LP stack of papers representing a chunk of a building, they securitized or they tokenized real estate funding of a condo project. And like you were referring to, it doesn't have to be a big thing. You can do one thing at a time. It's whatever has a following, whatever you have a belief in. So
sports stars, we're seeing that. That's a no-brainer, right?
Yes. You're going to have to take a look at CryptoKitties again, because one of the great learnings at CryptoKitties was that for their purposes, in their spiky high volume transaction periods, the Ethereum blockchain wasn't designed to handle that kind of traffic. So they created their own blockchain called Flow. And they are now working with major sports leagues to create, because, you had unique cats, trading cards.
It's the same thing.
It
and
is.
It's not only that, but it can be the future income stream of sports stars. It doesn't even have to be the cards.
Yes, because it's their identity, right? And they're taking little movie clips or little clips from games, like special moments. You can own the authentic one. So there are microeconomies around different things. So there's all kinds of new assets. So you talked about all the old assets. There's a new generation of different kinds of assets that have value that people may not understand today, but they will. Just like, an Instagram and YouTube have created microeconomies for influencers that you wouldn't have predicted.